Imagine this, you've done everything right. You budget carefully, you've built savings, and you've even started investing. Then one day, an accident, a medical emergency, or a house fire wipes out years of progress in a single moment. That's the scary truth. Without protection, your entire financial plan can collapse overnight. This is why insurance is not optional. It's the seatbelt of personal finance. Most of the time you don't notice it, but in a crisis, it can save everything. In this video, we'll break down why insurance matters, the main types you should consider, how much coverage professionals recommend, and the biggest mistakes to avoid. By the end, you'll know exactly how to protect your financial journey. Insurance is really about one thing: managing risk. Life is unpredictable, but risk itself is predictable. We know people will get sick, accidents will happen, houses will be damaged. We just don't know when or to whom. Insurance pools that risk. Instead of you facing a €50,000 hospital bill alone, you pay a much smaller premium to transfer that risk to an insurance company. This is how professionals protect stability. They don't gamble on luck. They prepare for risk. There are many kinds of insurance, but in personal finance, 4 are especially critical. Medical costs are one of the biggest threats to financial stability. A single hospital stay can erase years of savings. Health insurance makes sure one illness doesn't turn into financial ruin. If your family depends on your income, life insurance protects them if something happens to you. It doesn't replace you, but it replaces the income they'd lose. Professionals often recommend 10 to 12 times your annual salary in coverage. What if you couldn't work for months or even years due to illness or injury? Disability insurance replaces 60 to 70% of your income, giving you stability when you need it most. Homes, cars, and valuables are often your biggest assets. Property insurance protects you from damage, theft, or disasters. The key is to insure for replacement costs, not just resale value. Beyond the core 4, here are a few others to keep in mind depending on your situation. Liability insurance protects you if someone sues you for damages. Travel insurance is useful if you travel often, covering medical costs, cancellations, or lost luggage. Business insurance protects your income, equipment, and legal risks if you're self-employed. Not everyone needs every type, but professionals review their risks carefully and insure accordingly. Too little insurance leaves you exposed, too much wastes money. Here's a professional guideline. Health. Make sure major emergencies are covered. If you have dependents, life insurance should be 10 to 12x your annual income. Disability insurance should replace at least 60 to 70% of income. Property insurance should cover enough to rebuild, not just resell. Always tailor coverage to your personal situation, your family, your assets, and your lifestyle. Here are the biggest mistakes people make with insurance. Thinking it won't happen to me. Risk doesn't ask permission. Buying the cheapest policy without reading the fine print. Low premiums often mean low coverage. Forgetting to update coverage. If your life changes, new job, marriage, kids, your insurance should change too. Avoiding these mistakes keeps your safety net strong. Insurance won't make you rich. That's what investing is for. But insurance protects your wealth. It ensures one bad day doesn't erase years of progress. It's the seatbelt that lets you drive confidently, knowing you're protected no matter what happens. So if debt was the roadblock, insurance is the seatbelt. It won't speed you up, but it will protect everything you've built. In the next video, we'll talk about retirement planning. your final destination, and how to make sure you can actually enjoy it. If you're serious about securing your financial freedom, hit subscribe and join me for the next stop on the journey.